Hey everyone, welcome back to Corporate Dakota, the place where we get to peek behind the curtain of big business and sometimes find out they are just selling a little bit of stock to raise some cash. Pretty exciting stuff, right? Today we are diving into BlackSky Technology Incorporated's latest report, and it looks like they are getting ready to shake things up in the market by potentially selling up to $100 million worth of their stock. Let's see what this means for you and me. Before we jump in, if you love getting clear, no nonsense breakdowns of these corporate filings, make sure you hit that subscribe button. And if you want to chat about these deep dives or suggest future companies, join our Discord community. The link is in the description below. So on the 12th of December 2025, BlackSky Technology Incorporated, or BlackSky as we know them, announced they have entered into a sales agreement. Who are they selling with? Well, they brought in Deutsche Bank Securities Incorporated and Craig-Hallum Capital Group Incorporated as their sales agents. Think of them as the brokers who will help sell the company's shares. What exactly are they selling? It is their Class A common stock. This is the picture of ownership in BlackSky. The deal is set up so that BlackSky can sell shares piece by piece from time to time, and the total amount they can raise is up to a whopping $100 million. Now, how will this actually happen? The agreement outlines that these shares can be sold in a few different ways. One is through what they call at-the-market offerings. This basically means selling shares on the stock exchange, like the New York Stock Exchange, at the going market price. It could also be through block trades, which are larger chunks of shares or any other way that makes sense on the trading floor. Interesting to note, BlackSky will only use one sales agent at a time for these sales. They are not obligated to sell any shares at all if they do not want to. This whole plan is happening under a shelf registration statement. This is like a pre-approved plan that allows companies to quickly sell more stock when they need to or when market conditions are right, without having to go through the whole approval process every single time. BlackSky's registration statement was effective on the 12th of December 2025. And they also filed a prospectus supplement on the same day. A prospectus supplement is like a more detailed brochure of the specific offering. Either side, BlackSky or the sales agents, can call it quits on this agreement. They just need to give 10 days written notice. This gives both parties flexibility. Like most agreements of this kind, this one has the usual promises and guarantees from BlackSky. The sales agents will also get paid for their work. Their compensation can be as much as 3% of the total money raised from selling the shares. BlackSky also agrees to protect the sales agents from certain risks, including legal issues related to the sale of these securities, a standard clause to keep everyone protected. Now, beyond the agreement itself, there are some supporting documents. They've included a legal opinion from Wilson Sonsini Goodrich and Rosati Professional Corporation, which essentially confirms the legality of the shares being offered. They also filed a consent from these lawyers, which means these lawyers agree to be named in the filing. Turning to the signatures, we see Henry Dubois, the Chief Financial Officer of BlackSky Technology Incorporated, signing off on this report on the 12th of December 2025. This confirms the company's official acknowledgement of this new sales agreement. So what does all this mean for BlackSky essentially? They are setting themselves up to raise a significant amount of capital. This is common for growth companies. They might need this money for various reasons, such as funding new projects, expanding operations, acquiring other businesses, or simply strengthening their balance sheet. The fact that they are using an at-the-market offering suggests they believe their stock is fairly valued right now, and they want to take advantage of that. On the flip side, when a company sells more stock, it can dilute the ownership stake of existing shareholders. This means that each existing share will represent a smaller piece of the company. For investors, this can sometimes lead to a decrease in earnings per share. However, if the money raised is put to good use to grow the company, the long-term benefits could outweigh the dilution. BlackSky focuses on providing advanced data analytics and insights primarily for the defense and intelligence communities, and also for commercial clients. They use a constellation of satellites to gather imagery and data. This fundraising could be crucial for them to enhance their satellite network, develop new technological capabilities, or even to scale up their sales and marketing efforts to reach a wider customer base. Given the competitive nature of the space technology and data analytics sectors, having strong financial backing is essential for staying ahead. Now let's take a step back and look at the bigger picture. BlackSky is incorporated in Delaware, a popular state for company formations due to its business-friendly laws. Their file number is 001-39113, and their IRS employer identification number is 83 to 1,833,760. While these are important details for filing purposes, What really matters to us as investors and observers is how this move impacts the company's future strategy and its financial health. Their class of common stock and warrants are traded on the New York Stock Exchange under the tickers BKZ and BKZU respectively. This means they are a publicly traded company, subject to the scrutiny of investors and the market. Looking at this filing, it is clear that BlackSky is taking proactive steps to secure funds for future growth. The ability to raise up to $100 million is a substantial financial maneuver. This suggests confidence from their leadership in the company's prospects, and potentially an opportunity they are eager to seize, whether it is a new technology development, a market expansion, or even a strategic acquisition. However, it is always important to remember that selling more stock can dilute the value of existing shares. Investors will be watching closely to see how BlackSky deploys this capital. If they can translate this funding into tangible growth and profitability, then this could be a very positive move. If not, the dilution might be a significant concern. One key risk here is market reception. The company's stock price could react negatively to the increased supply of shares if not met with strong demand or positive news. In conclusion, BlackSky is positioning itself for potential expansion by preparing to sell a significant amount of stock. The success of this strategy will hinge on their ability to execute their business plan effectively and deliver returns that justify the capital infusion to their shareholders. It is a move that signals ambition and a desire to accelerate their growth trajectory in the competitive space technology market. Alright? That is our breakdown of BlackSky's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think raising this much cash is a smart move? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And if you want more of these deep dives into corporate documents, make sure you subscribe for more. Don't forget to check out the Discord link in the description below. Thanks for watching. See you next time.